Good morning, everybody. It is Wednesday, December 18th, and it is the last FOMC day of the year. Did you see the downward pressure in the insurance buying yesterday during both the initial move and the afternoon session of higher volume that we mentioned? And are you ready for Powell today and the structure in the market? Let's go ahead and get started with our prep for the S&P futures today. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Yesterday, we had mentioned that 61.45 was our minor line in the sand, and we broke that as we opened, and we stayed downside into the initial move in the highest volume period, and then a retracement into the London close before flushing down for that end of the day, new low of day. And we held our major line in the sand at that 61.11.12 area. That was key as that gives us a signal for the size traders and Chicago's agenda as we were going to head into FOMC today. As we opened in Globex, again, we came down right to our major line in the sand. It moved up to 61.14. That was held, and that shows us that Chicago is still calling in the defense, and we pushed higher in our overnight session. So we are in risk compressing mode still, no risk absorbing into Powell, and we have to keep the market contained into the end of the year. And to show you that insurance buying that came in, we showed this yesterday. This was at the end of the day on Monday, and where we ended up the day yesterday, and we monitor this intraday, but we came right into our, we'll call it our normal insuring ahead of data event. Now we're going to watch to see if this morning, when RTH opens, do we see the excess insurance buys that we've seen time and again throughout the course of this year that give us a very clear signal of what the next trade is. We'll be monitoring that intraday. If you're interested in learning how to do that, check out our Discord offerings or our courses as we can teach you how to use these tools and give you access to this proprietary information. On our positioning standpoint, we have insurance coming into this. Our longer term commercials are still net short based on our COT. Again, not really much in terms of any new information there. We don't get that until Friday. Our fund managers are fully invested and are ready to trade on margin, and risk managers or market makers are in risk compressing mode. So not much has changed in terms of that positioning, but our biggest participant in the market now has a $10 billion bid in the market. Another way to see this is we have a 10.74 billion. Even if we make larger outsized moves to the upside, we are still going to end up with between 10 and $6.5 billion, even if we go down. So that is going to provide a bid in the market on the downside and support, or on the upside, it's going to be that fuel to continue higher as we have a willing buyer that will continue to buy the dip and propel us up. With market makers in risk compressing mode, that doesn't change unless we get under 61.12 today. And that will be a big thing to watch as we head into Powell to see if we get any kind of flush on that excess insurance buying. Otherwise, our structure is very supportive here. And we have three poor highs above us that we can see now that the traders, the size traders were trapping the market, keeping it contained. And now today we can look for those to get repaired on that upside move. This week has played out as expected. We couldn't bring in that $3 billion offer yesterday that we mentioned. That was sitting at 61.08. And so, again, that's another thing that we watch to make sure we understand the agenda. If there was somebody that actually wanted to push this market down, we would have triggered that $3 billion in selling and triggered a lot more stop losses and selling in the markets. Holding that shows you that even that down move yesterday was fully planned, fully contained, and we understand how that defensive game, how that front running is being played. So as we look into today, we have our line in the sand here up to 61.13 3/4. We are expecting rotational price action today between 61.20 and 61.58. So kind of back and forth inside of here with our major pivot at 61.38. Now, if you've watched the COT video, that level should stand out to you as that was our major pivot for the week. And you can see it's behaved as such. We posted that on Monday at 7 a.m. and that held at 10 o'clock on Monday afternoon, held yesterday as the resistance point. And we knew this was going to be our big pivot for the week. on Monday. So now today, if we make our move on Powell outside of 6160, depending on how much insurance we have that will get closed out and get sold back to the insurance providers in the market, our upper edge is 6188. But if there's a lot of fuel and if Powell is very dovish in the end of year like he was last year on his last FOMC, we could see a move up to 6208 today. On the downside, if we make a move lower, we are still going to look for that responsive move up. But if we break 6120, we first have to get underneath our major line in the sand. That would change the market overall, and we would look for a move down to 6100 and down to 6083 again. But again, this level here, the 6113, is going to be the most important level of the day. If we start to go lower, that would change what the market makers are doing in terms of going from risk compressing to risk absorbing mode, and that would change us fundamentally in the markets. So we really want to watch that. Otherwise, we are going to be much more upside biased, and we'll watch for those insurance buying to come in to bring that downward pressure. And then when Powell speaks, the unwind of all of this. So that gets you ready for today, for the rate cut expectations of the last 0.25%, for getting us prepared for the last risk event before the end of year, likely markup and Santa Claus rally, and the Greeks that end up supporting that just as they did last year. So make sure to control your risk today, guys. Have a great day trading out there, and be ready for 2 o'clock and 2:30 for that FOMC rate statement and the Powell press conference.